Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles, and today I'm joined by the one and only Lady D. How's it going, Lady
Hey,
D?
everybody. How you doing? Good.
All right, well, let's start off. I'll jump into some TA real quick, and then we will chat. Okay, so everybody's wondering what's happening yesterday. Charles, you were dead wrong yesterday in the morning show. You said you did not think that gap was going to fill. What's the deal, bro? So truth be told, at the market open yesterday, I did not think the market was going to fill the gap. It did give us a lot of signals that it was going to fill the gap, an hour into the day. So there were certainly opportunities to take gap fill trades. And of course, there's always an opportunity to look for a bounce once the market fills the gap. It did not get a bounce. I'm talking about on the ES now. When it filled the gap, it continued inside the previous day's range. It then got new selling inside the previous day's range, which led to a late day liquidation. That was also, predictable based on what was happening. But what surprised me again at the end of the day was that the market was able to work its way back up and out in the M period and close above the previous day's high. Why do we care, Charles? Why do we care where the market closed yesterday? Well, yesterday was a breakout of a balance area. So this was the balance area in here. It was both a breakout by opening way above and then a back test by coming back into the previous balance area. Well, why is that important? Because if a market is going to break out, it will almost always back test. If it backtests and turns the previous high into support, that gives you a very high probability the market is about to make a move in that direction, in the direction of the breakout. If it does not turn it into support, it is a very high probability that it's going to move to the opposite end of the range and it's going to trade back down. So knowing which of those two happens by the end of the day, does it turn that high into support or does it fail and head back down, set you up for opportunities over the next day or two, depending on which of those happens? Well, the market pulled back above. So I don't love the way it looks as a balance area in terms of feeling bullish because we did spend a lot of time and bring in a lot of volume inside the previous balance area. But if I look at it as a channel, right? If I look at the market as just channeling to the upside, then it makes sense that we were just visiting the lower end of the channel and now we're turning around, heading back up. So I will basically be using the high from 2 days ago, this area right here around 57.96 as a really important level this morning. You can see that was resistance once we got back under there, that then turned into support yesterday, and it held as support in the overnight. If you look at where the time is tapering off here in the overnight, it's right at the highs from that previous day. So that to me is the really important level. If you wanted to keep it simple, you could call it the overnight low at 57.88. Anything above that level, I will assume, is going to get bought. So any attempt to find support, I assume they'll find it and they'll turn around and we'll make new all-time highs today. But if they come back through that overnight low, I will get very bearish very quick and look for the market to start to move lower because to me, that's what this is. This is a breakout of a balance area. It is a back test. It wasn't a perfect back test. It was a tricky one. But as of now, the market has decided they do want that new momentum to the upside. And so after 5 days of balance, I'm expecting more than 1 day of momentum, right? Which is what yesterday was. Because we made higher highs, higher lows, and had value higher, yesterday was momentum to the upside. Even though it felt like the market went down all day, by the end of the day, it was momentum up on a daily context. So we should assume that momentum is going to continue today. So I would describe myself as bullish this morning, assuming the market will find support somewhere inside the overnight range. If it does, looking for momentum to the upside. However, I would also describe myself as cautiously bullish because we spent so much time and brought in so much volume inside that range yesterday. And then the other reason, which I'm sure D will be able to comment on when I'm done here, but the other reason I'm cautious today is the NQ had a perfect back test of its balance area. Okay, I'm talking like literally to a tick, a back test of its balance area but it reversed 3 times at exactly the same level. It reversed in the overnight 2 nights ago, and it reversed twice yesterday at the exact same level. So as a breakout of balance that comes back to back test, I should be as bullish as can be. I should be thinking this thing is going straight to the moon from here. But because of that exactness of those lows, I am cautious. We know that was computers that were artificially stopping the market from re-entering that balance, that were artificially reversing it and forcing it higher. And why were they doing that? You know, that always just creates caution in my mind, because generally it's to get traders off sides. It's to get everyone chasing the longs and then they wipe them out. So in both markets, I would say it is bullish and potentially bullish for like a couple of days of momentum up from here as a breakout of balance. But I just am cautious. Any thoughts from you, Dean?
Yeah, well, I wanted to talk about that. Yesterday, it was such an important day in terms of, one of the largest gaps I've ever seen to the upside. I wanted to talk about what happened in the pre-market session. And then I just wanted to show a couple levels on my NQ chart. So when you're ready, I'll share my screen and maybe we can talk about a few of these things.
Yep, I just shared it. Let's do it.
Okay, so first I want to talk about what happened the day before yesterday, because I was watching this level right here all day long. And I was so, I just kept thinking it was so weak. You had weak levels in 4 or 5 of the 30-minute time periods. The market was just not going to break lower from that period. And I remember sitting there for those 2 hours just watching this and thinking it has got to break to the downside. And it just wouldn't. And I could tell with the tempo, the amount of time it was spending, and the tempo was so slow when it kept getting to that level. And I was being so frustrated. Like mentally, I think I got up and I just walked away, because I was just like, I don't understand why there's so many weak references down here and it's just not breaking. But I want to point this out, because so we have 5 periods where the market reversed at exactly the same level from the 25th. We had this massive prominent point of control right here, where there was a lot of time and a lot of volume spent. So building time and volume is always something we want to notice. Now, yesterday when the sell-off started, I couldn't have predicted, I was waiting for the gap to fill maybe halfway. As Jim Dalton says, large gaps don't often fill on the first day. So I was really trying to find a level for support and thinking that thing was going to turn around. But it didn't, and it sold off pretty heavily. But look where it stopped. It stopped at exactly, okay, so we have all these weak levels right here. We left another weak level from yesterday's low, but it was exactly at this super prominent point of control. And this was a day where I followed both the volume point of control and the time point of control, and they were the same. That doesn't happen. It happens sometimes, but usually they're slightly different. This level was the same. And so I find it is not, it's not by hazard that that's where the low happened. So even though, yes, we went a little bit back inside that previous balance area, I really think there were so many traders at this level who had accumulated volume and spent time that it just went back and tested that level. And then the rest of the day, it just, went back up and closed above the previous day's high. So for me, that's just something important I wanted to discuss and point out. Charles, do you have any comments on that before we go to the open and see what happened at the beginning of the day and signs we could have seen that it wasn't going to be a gap and go?
Yeah, I mean, I'm just going to say what I always say. It's very artificial. You know what I mean? There's no way that every trader on planet Earth happened to buy tech stocks at exactly the same level for 2 days straight. You know what I mean? Like, that's insane. So yeah, there's someone somewhere for some reason does not want the Q to go below, what is it, like 2170?
2174. Yeah. There is something going on here.
They just any of those NQ traders out there, level. Yeah,
I would really mark that level, because from watching it, like I said, on the 25th, I just remember feeling like, why is this not correcting these weak references?
Yeah, and if you even look at the low from that day as well, it's just poor as hell. It's 4 TPOs exactly at that level.
And you can see from this volume, with the volume, how the buyers just kept coming in here. I mean, when the volume is black like that, that just means that it's reducing, things are changing down here. So I knew not to go short. However, I just was wondering, like, why isn't this getting repaired, right?
Yeah, no,
And
that's
as we
insane.
talked about the market constantly changing, I'm finding that these weak references now are on both sides of the market all over the place.
Yeah, well, that's the bots.
And a
Yeah, I
few
mean,
years
it's
ago, it was never like that at
no,
all.
never.
So
There
this
was
is
a time
something,
where it was rare to see a poor low. Like you would get a poor low maybe 2 or 3 times a week, like
right?
at the most. Now we get multiple poor lows every day. It's
And
crazy.
on both sides,
Yeah,
upper poor lows, poor highs, and down lows. So I am
yeah,
very cautious now when I see that, because I just feel like, it's something to notice. However, I also want to point out that this low right here was one of the trades that I love the most, called the retest failure trade. I was watching it on the 15-minute candle. And when you see the market makes a low and then it retraces from that low and it comes back and it retests it, there's the retest. And that candle is green. If that on the 15-minute candle, if that candle is green, you buy above that green candle and you would have made a huge amount of money if you'd just taken that trade yesterday. So that was, that doesn't happen all that often, but when it does, I always take that trade because it's super profitable.
yeah.
Okay, so now I want to talk about what happened at the beginning of the day. So I do always watch the pre-market, and we haven't talked about that much, but I do believe that in the pre-market, there's a lot of information that can be gleaned to what I think the professional traders usually start pretty early. 7 to 8:30. I'm Chicago Central Time, so that's the pre-market for me. And yesterday, I was just really surprised at how the buying was just constant and fast. Like this just took off, and it was just so strong, the buying, that I thought, okay, this is definitely going to be a gap and go. Like in my mind, that's what I was waiting for. So, but we know there's a 70 to 75% chance that you're going to have the counter auction, right? So you're better off assuming that if you're going to take a trade, you're going to get the counter auction better than not. So normally I would put a tight stop above the high and go for that counter auction trade. However, because the buying was so strong in that pre-market, I didn't want to do it. I wanted to wait for more information, and I'm glad I did, because then what I noticed in the overnight, here we have this large node of volume up here, which I had marked, and I always have those marked on my charts, as we talked about, I think last week, potential points where the market could turn around and go the other way, or where it's going to come into resistance and maybe turn around. So what I thought was interesting was we headed up right into this node of volume over here. And then there was a slight counter auction to overnight inventory that started from this level. So we got just a little counter auction to where we opened, which was right here. And so we had this slight selling tail, which I'm always aware of. The market opened and it didn't even bring any time or volume above the open. It just came down here. Now, I also noticed that in the overnight, there was a lot of accumulation, I think, of positions here. Now, I can't tell if that's long or short, but there was time and volume spent right here. Okay, so we sell off, and usually I feel like it's between 8:45, 9:15, or 9 and 9:30, where we tend to have a consolidation period where we bring in time and volume. That was this. Now, I was expecting, because also we had these single prints, I had this level marked as a point of potential support, and maybe this would be the low of the day. So I was watching this and watching this. We got a little bit of the bounce. We kept entering into this area, but we really couldn't get above it. And I was just watching that. And I'm also watching my, volume nodes. This was all red. So I wasn't really sure what to do. I actually was thinking I was going to go long and that we were going to start a huge trend day to the upside because we had such a large gap, but that didn't happen. We really spent a lot of time and we couldn't bounce like at all in that period range. So that's where I started to feel, okay, I think this was going to be, we're going to go to fill a lot more of that gap. And that's what happened. Then we came down here, lots of time and volume, A and B period, both red. So I was just cautious. I have to say, I didn't take advantage. There's so much money to be made up here, but I was just waiting and watching. So Charles, I don't know what you think about that, because I know Jim Dalton always says on a trend day, you just want to get on that train, right? but we thought it was going to be a trend day to the upside. So how do you get on a trend day when it's in the opposite direction that you're expecting?
Yeah, so this is great because I covered this yesterday with members of the brigade. I'll just switch back to my screen and I'll show on ES because that's what I was looking at. So it's just easier for me to use that as an example. But essentially, here's the way I think about it. You can't always take a gap fill trade. You can't say every time the market has a gap up, I'm just going to short and assume it's going to fill the gap because you will lose a lot of money. Okay.
That has happened to me when I first started taking that trade. It would just crazy go to the upside and I didn't even have time to get out.
Exactly.
So that is good advice.
So you always have to, every time there's a gap, the first question you have to be asking yourself is, okay, what do I think the probabilities are that the market is going to fill the gap? Does this seem like a gap that has a very good chance of filling or not? And the way you measure that probabilities is just taking the information that you have lining up. So for example, on the daily, is the market in balance? Okay, then it's probably going to fill the gap. Is it a small gap? Well, then it's probably going to fill the gap, right? Or is the market breaking out of balance with a large gap? Well, then it's probably not going to fill the gap, right? You take whatever context you have in mind and you say, do I think the gap is going to fill or not fill? That is called thinking in probabilities. If you don't do that, if you don't come up with a probability that a gap will fill or not and get better and better at doing that over time, you'll just get killed trying to trade gaps because they're one of those things that they seem so easy. The market makes it look so easy on the days it fills gaps, but on a lot of days you can get your face ripped off when there's a gap and go. So that's the context that I start the day with. Yesterday, just like you, to me, it looked like everything was set up for a gap and go. I was expecting a half gap fill, and then the market was going to take off to the upside. I thought, the ticks were way overbought first thing in the morning. I thought when they get back to the zero line, wherever price is at that point, we'll get support, we'll get a bounce, and then the market will start heading higher. So do I regret not being in a short prior to that happening? No, I do not. Because in terms of probabilities, if I'm not talking about this one gap yesterday, if I'm talking about the last 20 gaps that I traded, approaching them like that is the better way to do it, right?
Yeah,
if you don't think the gap is going to fill, if you don't know where the support is going to be, just don't be in a trade. Be flat. You know what I mean? Be waiting for more information. So I feel good about that. I feel good about the fact that even though I missed that first 20-point move to the downside, it's fine. I don't have to be in that trade. I don't have to catch every tick of the day. And if missing out on those 20 points means I'm going to make more money over the next 20 gap trades, well, I'd rather make money over the next 20 gap trades. Okay. But then what happened was, as you mentioned, the market generated information started to tell us we were going to fill the gap, right? Support turned into resistance. Yeah. There was way more selling than there was buying. None of the dips were really like causing bounces in the ticks that could get above the zero line. So again and again and again, it kept giving us signs that it was going to go fill the gap. And then in the C period, like right when we printed the C period, I'll zoom in a bit here so people can see, there were two main focuses that I had. First off, it immediately created a poor low and then started to push away from that poor low. So now I'm saying to myself, I think the market's going to fill the gap. I think the market's going to come back to the previous day's high. There was a set of single prints that was here from the B period left over, and there was this very large node of volume right here. So at that point, the best trade to take in terms of probabilities is to wait to either backfill the single prints and get short there with a wider stop, or wait to test this large volume node that they made in the morning, which was first support and then became resistance, right? Retest that node. You may have gotten into it. You may have missed it by a tick, depending if that was your entry. But getting in at either one of those trades, okay, you still had a potential to make, 20 points. You still had a potential to make a 20-point trade with only either, 10 points of risk if you got in at the base of the single prints, or like 7 points of risk at the base of the single prints, or like 2 points of risk if you got in at, the node of resistance that we had monitored and we had already established was resistance. So to me, I'd rather trade like that. I'd rather miss the first 20 points, where I have no idea what the market is doing and it's a gamble and it's a guess and I actually think it's going to go up, then wait for a chance to get in where I'm only risking 7 points or 2 points to get into a 20-point trade and then make my money off of that. And at that point, the probabilities were very high. The momentum was down. We had more selling. The ticks were below the zero line. We left behind a poor low that needed repair. We had already, filled 2/3 of the gap and only had one little bit left, which increased the odds we were going to fill the gap. So at that point, I'm not guessing. I'm not gambling. I have a high probability of the trade working, and I have a good entry where my risk and reward is measured. So that's the way I think about it.
Is such amazing advice, because when I was a new trader, it was kind of in my brain, like, oh, you can't miss a gap day. Like, gap days are so important. It's your big chance to like make so much money. But it's also, like you said, if you're in the wrong direction at the opening of a gap, it's a big chance to lose money very quickly. So I think that this is this is the difference between a professional trader and a new trader. It's like those that understand, as we've talked about in the past few weeks on this show, to be patient and wait for information is just the biggest advice I think any new trader needs, because you will make so much more money if you're just patient. Yes, you may have missed that first 20 points, but there was another 20 to 30 points to be made once the probabilities were in your favor. And that, I think, is the best advice you could give any of us. Charles, is just fantastic.
I completely agree. It's just like that. And it's hard. It is hard to watch the market fill a giant gap and say to yourself, why did I just fucking short at the open and, just sit in the trade until it filled the gap? Because it went straight to a gap fill. But what you learn is that worked out great today, but that won't work out great tomorrow or the next day. So you have to have a system that gives you the edge no matter what happens. Right. And sometimes it means you miss trades.
And I also, just because it's a gap doesn't mean gaps generally, statistically and probability wise, do tend to turn into trend days. But just because the gap is up doesn't necessarily mean the trend is going to be to the upside. And that's a very important point to keep in the back of your brain when you see this giant gap to the upside and you've watched the pre-market just buy all morning long. Keep that in mind, because yesterday was a perfect example of that.
Yeah. And yesterday was just a tricky day. You know what I mean?
Yeah, it was tricky.
By the end of the day, it was exactly what we thought it would be, right?
Yeah.
It was a momentum day to the upside. Value was higher.
Sure.
We had higher highs. We had higher lows. We retested the breakout of balance, which is what we normally do. So like by the end of the day, it all made perfect sense. But it was tricky the way it moved intraday.
But for anyone who didn't understand the concept of balance and excess, and that sell-off was just a retest of that balance area. I mean, so many people could have gotten caught off because that selling seemed so fast and so strong, and the tempo was pretty quick. Once that break happened, I feel like if you weren't aware of the balance area, you would have gotten killed going short yesterday, like when it turned around. So, always knowing where those balance day areas are, having those marked on your charts, always be aware. The retest, once the retest happens, that's where you make money on the breakout.
100%. Couldn't agree more.
And that is just, if we can help other traders just realize that one concept, I think they will see huge changes in their P&Ls. That's just my 2 cents.
All right. Well, there was something you touched on I wanted to come back to, because I don't feel like you I don't feel like I fully understood, what you do with this. So you said you watch the market the hour before the market opens.
Yeah.
Because a lot of times the larger players are participating in there and it can kind of give you insights.
Yeah.
What are those insights you're seeing and how are you seeing them?
So I have just a volume. I look at the volume. There's generally a massive volume spike. I'll try to catch some examples of that on Snagit this week, and I can show everybody next week what I'm talking about. But I can see there's areas where in that pre-market session where the market just stays in one area for a really long time and just consolidates. Sometimes there's big wicks on those candles, and you also will see a large volume spike. And sometimes that I've just noticed, I'm writing statistics about that now, but if I can notice where those large buying tails or selling tails occur, where there's a lot of time spent where it's consolidating, I feel like it's bigger players accumulating positions in one direction for the day.
So essentially, if it seems like there was a lot of momentum, in the first hour, it'll likely continue into the rest of the day.
Well, not so much momentum. It's actually an area between 7 and 8:30 where there's not a lot of momentum. It goes kind of nowhere for 20, 30 minutes and just up and down in a flag consolidation type pattern. But then there'll be large wicks on the bottom or the tops of the candles. And when I see a large volume spike, if you have the volume indicator on the bottom of your charts, I've just noticed, and I'm going to start tracking this now. It's something that I want to track as to if the direction, if the wicks are on the bottom, if the momentum for the day is up, or if it's on the top, if the momentum for the day ends up being down in those pre-market consolidation areas. I'll take some pictures and have those to show for next week during the show.
Sweet.
And see, we can all sort of take notes about that.
Yeah.
It just helps, kind of get you ready for the day.
Sure. Yeah. It's something I've never looked at once. I turn on my chart at 9:30 and I don't pay attention to anything before that. So I'm curious. I'd love to see what you come up with.
Okay. Sounds good.
All right, guys. Well, as one final review on my thoughts for today, I'm pretty much bullish above, we'll call it 57.94. As long as they can keep holding support above there, I do think we are going to head up on the ES to all-time highs. The reason I think that is because we broke out of balance. It was a multi-day balance. So as long as we stay broken out, as long as we don't re-enter that balance area, we are likely to get momentum up, which means higher highs today. And the all-time high right now at 58.30 is what we call a weak all-time high because it was created in the overnight market. So anytime an overnight high is made in the overnight market, it will be repaired at some point by the regular trading hours. So if we have momentum, if we just broke out of balance and we have momentum on the daily time frame and we have a weak high, it is not unreasonable to assume the market will visit that high. So,
and one quick other piece of news for the day just was that the August PCE, the personal consumer spending, came out this morning, and it actually was as expected. So that was kind of good news for the market. The numbers were good. Inflation is, being tamed, and the only thing that was a little weak was consumer spending. But again, I think that information being good information that came out this morning is kind of another bullish thesis for the day.
Excellent. So there you go, guys. Good luck.
All
Happy
right.
trading. Thank you, Anthony, for correcting me. Yes. So if we get below that overnight low, I'm very bearish. I will get very bearish very quick. As we talked about, there is a lot of reason to be cautious as a bull today because of the weird lows we made on the Q yesterday.
Yeah.
But as long as we're above that overnight low, up and up, the market will go. All right. Thanks, guys.
All right.
Thank you,
Have a
Dave.
good day. Bye.